You've probably used RSI before. It's popular, it's simple, but what if I told you that there's another indicator that not only shows you that same overbought and oversold zones, but also gives you early warning signs before major moves? In this video, I'm going to break it down for you, the stochastic oscillator, why this might be a smarter choice than just the RSI, and how you can use it to get more accurate entries. The stochastic oscillator is a momentum-based indicator that highlights when an asset might be overbought or oversold. When the oscillator moves above the 80 zone, the asset is considered overbought, meaning it could look for a pullback or even a trend reversal to the downside. When it dips below 20, we consider this oversold, hinting at a potential move back to the upside. All of this so far probably sounds familiar, and just like every other indicator. So why should you use this over just a normal RSI? Let me tell you. First, if you compare these two side by side, you'll notice that the stochastic oscillator transitions between overbought and oversold much more cleanly than, say, a regular RSI, which often stays flat or indecisive in the middle of the chart. Now, most importantly, this indicator comes with two moving lines, the K%, which is the blue line here, and the D%, which is the orange line. These lines can help you anticipate price movements based on crossovers, and that's something the RSI simply doesn't offer. When the K line crosses below the D line, it signals a powerful move downward. And inversely, when the K line crosses above the D line, this signals a powerful move upward. These crossovers add an extra layer of confirmation, which can significantly improve your trading accuracy. Now that you understand the difference between the stochastic oscillator and the regular RSI, let's go over the various ways to use it effectively. One popular method is combining the stochastic with key levels of support and resistance. Here we have a well-defined resistance zone where price has bounced multiple times. When price moves to these areas, we can look for a potential reaction in almost any setup. So here, as price approaches this level again, we notice that stochastic has entered the overbought zone and shortly after gives us that bearish crossover. The K line begins to fall below the D line. Once the oscillator drops back below its overbought level, that can become your opportunity to enter a short position. There's another effective way to use this stochastic, and it's to use it to identify divergences in price on your chart. A bullish divergence occurs when price makes a lower low but the stochastic makes a higher low. This can suggest weakening bearish momentum, and once confirmed, you can look to enter that long position. A bearish divergence can happen when price forms higher highs, but the stochastic still prints a lower high. This signals fading bullish momentum, and once you've confirmed, you can look to enter a short. It can be that simple. But I think you and I both know that trading is rarely so simple. So let's look at a live setup and how to apply this technique that we're learning. First, we identify the overall trend of the market. In this example, we have a downtrending market. It's moving aggressively lower, setting lower highs and lower lows. Eventually, our price will begin to consolidate and potentially even make a higher high. If you see a setup like this, check over on your stochastic. If it's telling a different story, in this example printing a lower high, it's creating a clear bearish divergence, and this can be your tip-off to look to enter a trade. At this point, I like to wait for two confirmations. The stochastic has to drop back below the overbought zone, and price needs to make a lower low to confirm that bearish structure. Once those conditions are met, we can look to enter a short trade on the retest of that swing low. Your stop can go just above your recent high, and you can target your levels lower. If you found this video helpful, please share it with a trader that might get some value from it, and make sure to check out the other trading tutorial videos on the Tom Crown channel.